Alissa Coram here, and my guest today is Eric Krull. He's co-author of the Lifecycle Trade, a frequent guest on IBD Live and the IBD podcast. It's about time that we had you on Stocktails, Eric. Hey, happy Friday.
Hey, happy Friday to you. It's nice to be on one of the broadcasts where we can enjoy a cocktail while we're having our Stocktail chat.
Exactly. There you go. Cheers, everyone. Happy Friday. Enjoying a LaCroix. And you've got a summer shandy, yes?
Summer shandy. It's what I have on Fridays after the market closes.
What a great way to ring in the weekend. And happy Friday to everyone out there tuning in. Eric, we already have some questions from live viewers, so really looking forward to asking you those questions on their behalf a little bit later in the show. But to kick things off, want to hear your take on what went down in the market this week. We did finish on a positive note, but I know there's still more progress we need to make. What's your take?
This reminds me of a market that can't go down anymore, but is having trouble going up. We are stuck in a range. I was really disappointed to see Monday, Tuesday, Wednesday were all down days, and Thursday we gapped down. But then the NASDAQ clawed back most of the day. I don't remember if we finished. I think we finished slightly up on the NASDAQ, but down on the other indices. It's only yesterday. I can't remember.
There's so much information to consume as an investor. You know, you're looking at so many charts and things like that. So
and then today we finished with an up day, and it was just one of those things where just when you thought everything was going to fall apart, we didn't, and it was set up to fall apart. And I mean, so I'm taking from it some slightly positive signs. Now I'm looking at the NASDAQ. No, we gapped down Wednesday and came back, still finished with a loss. Yesterday
that was a resilient reaction to the CPI numbers.
Yeah. So a good market does open lower and finish higher, and that's happened Wednesday, Thursday, and then today. We finished at the high of the range today. I can't remember the last time we had 3 days in a row where we finished near the high of the range. It's been a long time. So again, I think last time we talked, I think I talked about we have see some green shoots, like the plants are just starting to come out of the surface. There are not many patterns out there on charts that look good at all. I was talking with a friend today, Kathy Donnelly, and we were both saying how maybe it's going to take another 3 or 4 weeks before we finish some nice bases, but we're starting to see at least some bottoms and some coming off the bottom. So my take is, it could have been a lot worse this week. We had some bad news and the market came back. So that's a good sign.
It is. And then on the upside, though, we still have a lot of hurdles to clear. We're not yet above the 50-day line. That's been a big resistance level for the NASDAQ this year. So like you said, it could take a couple more weeks for the setups to form, and even best case scenario, the market to really get back on its feet. But we'll have to see. I mean, in your experience, how many times has the market shifted unexpectedly and you have to just be ready to go and to go with it and follow those signs?
Yeah. Multiple times. I'm surprised, and it turns just when I don't expect it. And this is one of those markets where if you think we peaked back in last November, we've probably had, looks like 3 different waves down. I'm not a wave counter, so I won't argue that. But then we tried to come back, and each time those failed. And the most recent one, just 2 weeks ago, we finished near the high on a Friday, bumped up against the 50-day moving average on the NASDAQ, and then immediately went down. It was like we couldn't even get over it this time. And now it looks like we're trying one more time. So it can shift when you don't expect. We're having bad news about the economy. It seems like nothing's happening good in Russia, Ukraine, and yet we're not going down as bad as we were.
Yeah. All right. Well, we'll have to see, and we'll always remain open-minded to any scenario.
Right.
That's what I always like to say. Even if you're a glass half full or a bullish bent type of person.
I'm more than half full still.
Oh yeah, there you go. Still more than half full, but but we'll have to see. We also need to build in that worst case scenario. So I think it's great to do all the scenario analysis and a lot of the historical research that you've done on market rallies as they turn, I think is so fascinating. And I feel like really keeps you in step with what's going on.
It helps a lot to know what's possible. And right now, my thinking is we're still haven't turned the corner. If you're going to invest at all, patience is still key, and go light. There is no reason to get heavily invested right now. There aren't that many stocks set up. The market isn't acting great. It might be the time to put some test probes out there, and that's it.
Yeah. All right. So now on to some fun questions, Eric, before we take a look at the different stages of the life cycle and some of the terminology that you and your co-authors have coined, so we can hopefully uncover that next batch of true leaders. We'll also briefly take a look at a couple recent trades that you made, some market feedback that you've gotten, and then some questions from the audience. So just some quick rapid fire questions for you here, Eric. What would you say is the most unique company, the stock that you've ever invested in?
The most unique. Wow. That's a great question. I can think of a few stocks that were unique and didn't do well.
Yeah.
But probably the most recent one, I would say, is this Lightwave Technologies. I think it's LGLW. They don't have really any sales yet or earnings very much. I was in it for a little while, but now I'm just watching it. And what they do is they make chips that they cut down the power consumption by 50% or more, because they use light to communicate the signals versus electricity. And it's a way to try to stop the use of heavy power. As the chips get more complex, they get more powerful, they burn more power. And then you have to have these server farms with a tremendous amount of cooling. So it's a technology that I think is unique. It doesn't have the CAN-SUM fundamentals yet, so I'm watching it. I was in it for a little while. And I think of a stock that way back when, AFFX, Affirmatrix, I don't think they trade anymore, because I bought the stock and on a Wednesday or something like that in the afternoon, and the next morning they announced they had a lawsuit, and it went down 18%. So I was in the stock like 3 hours and lost like 18% all in 3 hours. And so that was unique.
Yeah, a unique trading experience. And the ticker there that you pointed out is LWLG for those playing along at home.
Right.
Okay, so who outside of William O'Neill would you say is your biggest trading influence?
Those are good ones too. I'd say these rank kind of similar. I'd say Dan Zanger and some of the things he said affected me. Jim Ropel, who I've known a long time, and very motivational guy. And my co-authors, I'd say Eve Bobach, Kathy Donnelly, and Kurt Dale. They've all influenced me a lot. So yeah.
That's great. Okay, and last but not least, what would you say is your favorite chart pattern to buy off of?
My favorite one, I would say, is the high volume breakout, either off of a flat base or a cup and handle, early stage. That's my favorite. If you can find one early stage, get a high volume breakout that just takes off, that's my favorite. It just goes, and you just rest comfortably. And if it's in trouble, right away that it's acting different than it should. But yeah, that's from a flat base or a cup and handle, high volume breakout. Great. Especially after earnings.
Yeah, yes, those earnings moves are very, very powerful. And like you said, early stage. So maybe as stocks are trying to bottom, getting above some moving averages, maybe we'll see those bases form. But TBD, we'll have to see. Okay, and now next, let's go over some of the different terminology that you use when looking at the life cycle of a stock. And we can pull up just one example, perhaps. We could pull up a lot of examples just to kind of walk through it. But first, here's a current young gun, Privia Health, PRVA, medical software stock. It's had a great couple of weeks, but walk us through the life cycle trade analysis of what we're seeing.
Well, we like to look at the stocks beginning with the IPO week. And typically, what you have is the stock IPOs, and then it forms either some sort of base or it goes into a IPO advance phase. And you can see on this one, it had a couple volatile weeks, and then it started to advance. And then you see that peak just above where that green is there, right? That's the IPO advance peak. And that line there where you showed there, I would say that's like the first breakout from a not a great base, but it's like a 4 or 5 week base, IPO base. And then the stock kind of reached the peak and then immediately got into trouble. It started to come down, and then like many IPOs, in fact, 91% ultimately undercut their day one low, and this stock, of course, did that. And it went down low in a bad market, and then it started to go sideways. And what stands out about this stock in my mind is, despite the fact that the market has been going down, this one has been going relatively sideways. If you can see there, that whole period that you just underlined, we call that the institutional due diligence phase, or the IDDP. And why do we call it institutional due diligence? Well, the reason is when a stock goes public, they have promised all these great things. They talk about the products they have, how they're going to grow, what's markets, and really they have to start showing with true performance. And so for the next year or two, they have 4 to 6 to 8 earnings announcements, and they actually announce what they've done in terms of sales and earnings growth and projections. And that's when institutions can see whether they actually are delivering on their promises. And when they do, they start to buy, and you start to see volume pick up. And what we'd like to see is the stock trading over $20 million worth of volume per day. And how to get dollar volume? You take the closing price times the 50-day moving average volume. And that's important because institutions need to be able to support the stock and buy it. They're the ones who acquire hundreds of thousands of shares and ultimately millions of shares if it's a company like Apple. And they drive the price up. I mean, it's not you or me and all the other people watching today that are driving the price up. It's institutions. And so after you see that nice sideways chart action there in the due diligence phase, what you like to see is at some point it comes up like 30% off the bottom and forms some sort of cup and handle base or other type of standard base. And in this case, if you squint your eyes and ignore that second bottom, you can see if you go further left, like there, it went up 30%, then formed a cup and handle base. And then that nice dotted line you have there with the chart pattern recognition, it shows a breakout. And that's like maybe the first place I'd be interested in buying. And it's the beginning of the institutional advance phase. Now, I would expect if the stock continues to advance, it's going to run into what we call the turbulence zone, which is the old highs. And that would be a place for it. And maybe if you go to that very first line that you drew on the left from the high from like the second week, so there, and then maybe also around that $40 level where it hit a high like after only 2 weeks.
Okay, high after this one.
Yes, I would expect turbulence there, and then
Okay.
turbulence at the all-time high.
Great.
And if you can go through those levels, especially in heavy volume, that would be another place to add. But I would expect the stock to stall and maybe go back and forth a little while at both of those points. But that's the way we'd analyze it from a life cycle viewpoint.
Great.
You have the institutional advance, IPO advance, then the due diligence phase, and then you go from the due diligence phase to the institutional advance phase.
And so then once it does break out of that turbulence zone and into new highs, and forms a base from there, is that another opportunity to look for a big move earlier on in a stock's life cycle?
Yes, it's exactly right. The institutional advance phase is typically the most powerful phase of the stock's life. And that's where we look. That's where we hope to get.
Hmm. So we'll have to keep an eye out and see as a lot of these stocks go under their due diligence, because we want to focus on that new leadership, right? Is
Right.
that what you're looking for? I mean, we don't want to be stuck on the leaders of the past. Of course, there are some great established names that have really weathered, the market storm in the last couple of months, especially a number of medical stocks that stand out on that front. But some, new blood, some fresh blood here, and looking for some signs of them uh, coming up on the right side after bottoming seems like what we should also be keeping an eye out for.
Yeah, a new rally, a new bull market. Typically, you also have new leaders. Stocks that have advanced 10 to 20 times, from the before, if they went 100% to 2,000%, those are not the ones that typically lead the next rally. You usually get new leaders. Some of the old ones will come back. I mean, how many times does Apple come back, right?
Yeah,
Um, and
exactly.
Tesla might be one of those this time. It's got great fundamentals.
Yeah.
The number of car sales are growing. I expect Tesla to be one that comes back. But then some other ones, you just never know. I mean, will Zoom Media or Peloton come back? I don't know.
Well, I hope that Peloton at least doesn't go away, because I have one of those darn bikes, and so
Oh,
if they stop producing content,
yeah, yeah.
I'm
I just
out of
saw.
luck.
I just saw 2 days ago they're outsourcing the
Yeah.
manufacture of the bikes. Yeah.
They are. They
Yeah.
are. So yeah, but just because you like a company doesn't mean you should own the stock by any means.
Right. Okay. Pull up one. Here's one. Here's a great example of that. Pull up Potbellies. PB. It's a sandwich shop that started in Chicago. You can even go to monthly if you want. But this was a stock I thought when this went public, oh, this will be a great one. It's been a disappointment. We called it a disappointment in our book. And since we published it, it continues to go down and go sideways. And it, like the company, like their sandwiches, not a great stock.
Mm-hmm. So true. So true. I mean, that fundamental research is so important, though,
Mm,
to build that thesis and build that conviction. But you can't rely on that alone.
right.
You have to be looking at the chart as well. I totally agree on that. Okay. And speaking of Tesla, you mentioned it. Let's talk about some recent trades and some market feedback that you've gotten as of late. Now, Tesla here, it's definitely not the same as it was in 2020 or
Right.
2021. Some great moves in the prior years, but in the last couple of months here, it's been making some higher lows.
Right. If you go to, let me see here, I bought some on, let's see here, June 21st. If you want to find that day, it just went above the 21 EMA that day. And that was like my minimum requirements for a stock to be considered, is it had to go above the 21 EMA. And it
Okay.
did. And then just like it started to go up a little bit more. And then just a few days later, it went back below the 21 EMA on June 28th. And that shook me out. And then it went lower, lower. And then here it comes back again, back above the 21 EMA. I did not buy this time when it first did that. And luckily, I stayed out of it. And then I did buy some more just yesterday. So we'll see. A little bit, a probe. I think the
Yes.
market's acting a little better. It has a couple higher lows. That's a good sign.
Mhm.
It's just getting above the 50-day moving average, which is another thing I want to see. But it's like I said, green shoots, like it's just starting to grow, maybe.
Right.
Yeah.
Yeah. So let's see if it can continue. So getting market feedback, and so it's showing that even with some of these hot established names, great growth companies, it's been hard to trade them.
Yeah. Pull up, if you can, Devon Energy, DVN.
Yeah.
Okay. So I will admit to missing all of that great move. And then when it started to come back, I thought, okay, it's doing a nice pullback, just what I've wanted.
You
And
mean in mid-June?
yeah, mid June. Let me
Mhm.
see if I can find the date I bought that one. I can remember it well. Uh, because painful memories are always easy to remember. I bought it, let's see here, sometime during the day of, let's see, the nice blue up, June 27th.
Okay, 27th. Nope.
The
There we
27.
go. That one.
Yeah.
That one. So pull back to the 200-day.
Kind of a pullback to the 200. Oh, it's coming back. Oil's going to be strong the rest of the year. We all know that. And I buy some, and then 4 days later, I'm out. It went back below the 200-day, and oil keeps dropping like a rock. And all those oil stocks that look so good, they're below their 200-day moving averages.
Yeah.
How do we go from market leaders to below their 200-day moving averages in like 5 weeks?
Yeah.
I mean, we can go through a few others like ExxonMobil, XOM.
Yes. Chevron is, I think, even more pronounced.
And then EOG.
Mm-hmm.
I mean, look at that.
Yeah.
They just fell apart.
Bang.
So this was one of those, if you were late to the party, you missed the party. I missed the party.
Got cut some pieces here and there a little late in the party, but I had to be quick in and out. And, not specifically with Fang, but in this kind of late May, early June period. But yeah, and the fertilizers too.
Mosaic. Let's pull up Mosaic.
Yeah.
Yeah, I remember, was it 2006 or 7? Mosaic, Potash, and a few others. They went on long runs. They were doing great, and then they fell apart.
Broke really hard, yeah.
And here they came again, and we thought, oh, it's going to be a 2 or 3 year run, and we, didn't get the 2 or 3 year run. Well, at least we haven't yet. So.
Yeah. Well, great analysis there of some of your current trades and some market feedback you're getting and some of the sector rotation that we're seeing. Now I want to go to a couple of audience questions. So hello to all of our live viewers. So Yeti Shark is asking you, what are the best looking IPO bases right now?
Well,
on your radar?
I will admit that I won't know the best ones because I haven't looked at a lot of them recently, but I'll tell you some I am watching. So why don't we look at DRVN, Driven Brands. Let me go to weekly. It shows up a little better. Yes. That's a nice, flat, long institutional due diligence phase. So I want to see the stock break out of this base here at the end. What I don't like is it doesn't have any IBD mutual funds that you guys like to watch, the one that comes out of the thing on the right there.
Yeah.
So if it had that, I'd be even more excited. But the number of funds are increasing, and the numbers are good. I mean, this is a company that has brands like Mako and I forget the auto and glass company. That's Mako, and then Meineke. If people are going to be, if we're going to be in a recession and sales of cars go down, you'd expect people to have their cars repaired. And so I like this long setup. And by the way, I don't want anybody to take advice. And I learned a long time ago, don't listen to someone in a bar giving stock advice. And I am drinking beer here.
Yeah.
So don't go out and buy this because I said it.
This is just happy hour here.
It's a watch list, okay?
Yes.
Another one
there.
Right. Roblox, RBLX. That has had a terrible decline, but it's looking like it's coming off pretty strongly off the bottom. And I like seeing that. And this is one of the few, the rare, above the 50-day moving averages. I will disclose I took a small position this week, and we'll see. Sometimes stocks that are new, that went through a big decline in a bear, they're the first ones to come back, and they come back strong. I like the tight action on the daily chart recently, so we'll see. It's one I'm watching and have a small position.
Here's another one for you, Eric. And this is one, so maybe there's a little bias here in that this was one that Kathy and I looked at together. She has some ties to this company. She's using it. Has a hot streak with her Spanish. So muy caliente, muy bueno, Kathy, with your Spanish speaking skills.
I think they keep track of how many days in a row you've used this.
Yeah.
She has an incredible long streak going. Right. She hasn't missed a day in a long time. And this is another one that's going through a due diligence phase. And it's come off the bottom. It almost looks like a double bottom base at the bottom that just went through the peak of the middle. But I think this is one of those where um, it looks like it's ready to go. The only thing I don't like about it, sorry, Kathy, is it doesn't have positive earnings yet. I'm always more excited when I see that, but
Mhm.
it's set up pretty well.
Yeah, some nice sales growth. Some of our research shows that even if companies aren't profitable, if they have 40% or more revenue growth, especially if they are these more recent companies, that is a good sign. Also, I'm noticing the volume trends here on the weekly chart looking promising. I think it could use more progress though, but it is one to watch. I think it's an interesting
Sure.
one to watch. And so, a fun question from Pablo. He's saying, cat or dog? Eric,
Dog.
dog. Say, do you have a dog?
Had a couple. They were great dogs. We had to put them down a few years back.
I'm sorry about
Yeah.
that. I'm so sorry about that. As an owner of an old dog, I can totally relate to that.
Mhm.
Okay, so Blue Harbinger, and I'm reading these kind of live here. How are the last few batches of IPOs looking in this market? And I know we just looked at a couple of them, but I know, and I guess they're probably not doing too well now. I could be wrong, but in the Q&A, if you know the ones I'm talking about, it's going to have to be one of those like
I just tell
guess
you,
that ticker, because there were two that were kind of energy related, when energy utility related, when that was
right,
doing good, that we were looking at. I don't know if
right.
Eric, you know,
What is the electrical or I'm trying to remember what that one was.
okay, yeah. So yeah, that one fell apart pretty quickly. There was another one that I feel like ran up
No.
a lot stronger out of its IPO base. But if anyone in the Q&A can remember, but anyway,
In general, IPOs in the last year and a half have been terrible.
yeah,
I could name you 20 of them, and they all have the same chart pattern. And the chart pattern is they went up for a while and they went down, undercut their IP low, and they've just been going down along the
yeah,
bottom. I think I looked at every IPO from 2019 to 2022,
mhm,
and there were only, I think only 10% of them were even above their day one close, which means you could have picked any of the IPOs of the last 2.5 years, and you had a 90% chance if you bought it on day one, you were down right now. Um, so I
wow,
mean, like it's just,
a lot of destruction.
and there's only 35 IPOs that went public from January 1st of this year till mid June, and last year at the same time we had over 200, 225. So the IPO pipeline is frozen. No one's talking about Impossible Foods coming out. That was one that everybody talked about. It's not
Mhm,
coming out yet.
mhm,
Um,
mhm.
Only biomedical stocks have really been coming out because they need cash. They have no earnings, and they have to go public to get the cash to keep running. So
Yeah. All right. Well, good thoughts there. Yeah, I feel like if there were any super recent IPOs that were doing really hot, we would be talking about them. So the fact
yeah,
that we're like kind of scratching for
yeah. Well, let's
figures
pull up a
there says
couple.
something.
Let's look up Airbnb, Airbnb.
Yeah.
That one has had a lot of attention, and it can't get going.
Yeah.
Every time, I mean, if you draw along the bottoms, kind of a due diligence phase, it broke through that, and it's like maybe going to form a lower one. It just seems like you can't go. There was a time when Marriott and Hilton all started to look good, but
Yes.
let's
Yes.
pull up Marriott. They went lower. I think it's finally starting to bounce. It's MAR.
Yeah.
And look, it had that nice long sideways base. Oh, it's going to go because everybody's going to travel again, and then
A
it took
lot
a
of
little
false
bit.
starts here, 3 in a row.
Yeah.
Yeah.
Um,
Exactly.
Moderna looks all right. mRNA, that one's got my eye again. It's coming off the bottom.
Thanks.
It's had some nice 3 weeks there, the big long blue bars with finishing the top of the range on the bottom. It's like, oh, maybe this one's, you know, going to come back. It's above its 50. If we go to daily, you can see that it's getting close to the 200 day. So
Mm-hmm.
it's at a long flat base. Um, Maybe it'll break out above that. They have more drugs in the pipeline. Um, I think they're working on a flu vaccine so that they can make a vaccine
Mm-hmm.
closer to the flu season than anyone else can. We'll see.
Yeah. And who knows, maybe earnings in a couple of weeks will be the catalyst for
Right.
a lot of these stocks that we're seeing working on basis. So that's great. Okay. And Richard, hey, Richard, he is asking what would be some great historical charts to study, do you think?
Some great historical charts. Well, if you're looking at ones that from IPOs, I'd say Palo Alto Networks is a good one. Um, that is, we show that one in the book. If you go to weekly, look at that very first part of its run. It has a very short IPO advance, and then it undercuts, does a long due diligence phase, even down cut, and then forms a base off the bottom, breaks out, and then look at where it first hit resistance after it started advancing. Good old turbulent
So,
zone,
yep.
right? So there's the turbulent zone, runs into trouble, corrects. And if you buy that breakout after the turbulent zone, look how far you go before you ever run into trouble. That's one to look at, Palo Alto Networks. Another one is, used to be called Facebook. Now we call it Meta.
Yeah, I guess before we move on, I mean,
Yeah,
we're seeing a lot of charts right now that maybe,
yes,
we're here or
exactly.
here. Who knows? Who knows? We're a lot of stocks that are in that due diligence phase. So,
And that's why we talk about you want to be patient. There's no reason to buy in day one. The big gains were made 2 to 3 years later.
mhm,
It goes through the due diligence. Institutions see, oh, they can make money. They're consistent with sales growth, and they pile in.
mhm.
They can't do that in the beginning. Yeah.
Right. Exactly. Yeah, this is such a great example. And then we can go to Meta, formerly known as Facebook. Here's another
Right.
one that didn't really have
It's famous for going
sales
down.
immediately, right?
Right, famous for going down 50% from the opening day. That was a pump and dump. Everybody was excited about it. They pumped it up, they dumped it, and then it was July 25th of 2013. It broke out and it went up. I think it was 35 to 40% on July 25th, 2013. And then from there, you think, oh, it's too late to get in, right? And look what it does. It does the long institutional advance phase after the IDDP and just kept going.
Mhm. And this one, unlike Palo Alto, really pulled back many times to the 40
Mhm.
week, whereas Palo Alto was held by the 10 week. How do you treat that? Does it depend on the personality? Does it depend on your conviction? Which one that you will use to help keep you
Yeah,
in a stock for that big advanced phase move?
all of those things. And for me, I did not hold all the way through that correction. You drew a nice line there, but you go further forward to the next peak. That's where I sold in there. I couldn't hold through that long base. I eventually got back into it, but it depends on the conviction. I have a good friend, Kurt, who held the stock for a very long time, did unbelievable with it. And I think he held through both of those bases and did tremendous.
Yeah, and I mean, and this was with the flash crash in 2015 kind of thing, and it held the
Mm-hmm.
40 week.
Yeah.
So pretty incredible. Okay, thanks for that question, Richard. Let's get to just one or two more here. And I guess this is kind of the answer is kind of it depends, but you'll provide more details. David is asking how long after the IPO begins does that institutional advance phase begin? It sounds like it takes a couple years most
It
times.
can. It depends. I mean, typically a due diligence phase is like 6 months. Sometimes it could be a year and a half. And really, it depends on how many good earnings reports they have and good sales reports before finally the stock just takes off because people start piling in. So it depends on how many earnings phases it takes. Like when you look at Facebook here, what was it? 18 months, I think. So that would have been a year and a half. Um, a stock like Google, way back when, it didn't take that long. I mean, that one started off almost immediately into
Yeah.
um, like an IPO. It went from like institutional advance phase from the beginning,
Hmm.
and then it finally went sideways for what about a year and a half, and then it took a second leg up. But yeah, no, it depends. We've seen stocks that go 2 years in a due diligence phase, and seen some that go 6 months.
Mm-hmm. All right. Well, Eric, this was such a fun happy hour. And I know I learned a lot, even more than I already knew, about the intricacies of the life cycle trade method. And I think it's going to really come in handy as we do start seeing a turn in the market. So cheers to you and cheers to the
Cheers to you.
weekend and to everyone for tuning in. Thanks so much. And we'll see you back here next week. My guest is going to be Charles Harris, longtime portfolio manager at O'Neill Capital Management / O'Neill Global Advisors now. And it'll be great to have him on the show. Thank you, Eric. And
thank you, Allie. It was a pleasure to be here. And I'll give you one of my favorite quotes, and it came from Jim Ropel. It came from Jim Ropel. He said, "Price will hurt you, size will kill you."
Ooh, that should be on a fortune cookie.
Yeah.
I like it. I like it. That's a great reminder. That's a good like sticky note on the computer monitor reminder. Yeah. Love it. Thank you, Eric. Thanks everyone for watching.
Thanks, Allie. Take care.
Cheers.
Bye.
Thanks for watching.